What's up, audit fans? It has been a really long time since I've said that line. Hi, my name is Dr. Amanda White. I love to audit, though I've been offline for a little bit of time, and I'm back, and I thought the way to try and get myself back into the saddle would be to make some hopefully weekly content. That's my goal at this stage. So I'm reviving This Week in Audit, which was a show I made a really long time ago, talking about audit news of the week. So welcome to This Week in Audit. I created this and recorded this on Friday, the 16th of September, 2022. So let's dive in. Question everybody's been asking. I've been getting tweets about it. I've been getting Instagram messages. Amanda, where are you? When is the next video coming out? Where have you been? So where have I been? At the end of last year, probably about November, December, my boss came to me and said, hey, Amanda, an opportunity has come up for you to teach first year accounting with 1,600 students that you'd be in charge of. You get to create the subject from the ground up. The assessments, there were topics I needed to cover, but how I taught it, how I designed it, all the learning materials was up to me. So I got to start from scratch with an absolutely blank canvas. That subject name is Accounting and Accountability. There's actually a YouTube channel that goes with the subject called Accounting and Accountability. I wrote a free textbook in conjunction with adapted materials from OpenStax, which is an open free textbook publication platform. So we adapted a book and wrote a lot of content for a brand new textbook that we give away free of charge to our students and to anybody else. I'm working on the audio book. We created all of the learning content. I wrote approximately 500 practice quiz questions. I've written hundreds of actual assessment quiz questions, class problems, and that took pretty much 40 hours a week to do that, plus the rest of my job, which was about 20 hours a week. So I was working 60 hours a week from about December until July. Took a little bit of a break to go to some conferences, and I've been doing research projects. And I'm teaching my smaller semester now in my second semester. There's only 487 students there. Hi to all my students who might be watching. So that's where I've been. I've not been slacking off. I've just been trying to have good work-life balance. And I know that all of you out there, all of my subscribers have been missing me, and I've been missing making audit content as well, but I couldn't do all of those things at once and maintain my sanity and my work-life balance and good relationships with my family and my friends as well. So I needed to step back from something. So I want to thank all of my community for being really gracious around that time, and for those people who've been reaching out to me on my socials as well. I had one message from a lovely young person who came #1 in Malta in their auditing exams for, I think it was ACCA, using my resources. So congratulations to that person, and to all those people who've become qualified or have passed auditing since I've been away. So This Week in Audit is a weekly audit show. I'm going to try and record it on Fridays and then put it out a couple of days after doing some editing. So this week, I'm going to talk about EY. Hopefully, is this working? What have I done? Okay. It's been a while. I'm out of practice with using all of my tools. So you might have heard about Ernst & Young. They were involved with the Wirecard fraud. And one thing worth watching as well, if you haven't already seen it, is certainly the Netflix special, which I have just started watching on Wirecard as well. So it's a great, I've only like 30 minutes in, but it's a really interesting documentary about EY and Wirecard. And EY just didn't think to ask where the money might have been when it should have been provided to people. Now, oh, why isn't this letting me? I had all these animations in. There we go. Here's the next one. Oh, now it's going too far ahead. Oh gosh, I'm hopeless at this. You can tell it's been a little while. Oh, now it's not going to work. I'm tapping in the wrong place on the screen. Okay, it's been a long time since I've made a video. I've upgraded to a new iPad Pro. I'm a little bit rusty. Earlier this year, late last year, it was announced that EY was going to spend $2 billion on improving audit quality after a whole range of different scandals. And that $2 billion was around training, new methodologies, etc. And then also, EY was fined by the UK accountancy watchdog £2.2 million when they'd failed to audit Stagecoach properly. So EY's been in the wars a little bit. Mind you, they're not the only one. A lot of the audit firms are undergoing the same scrutiny and they're having the same types of stuff-ups. But the reason why I wanted to focus on EY as part of This Week in Audit is that EY has announced that they're going to split the audit firm into the accounting and the consulting businesses. So this article here is from Matt Goldstein from the New York Times, where it says, look, we're going to separate the companies into one that does accounting and auditing and the other one that does consulting and advisory work. Now, what does that look like? It's going to look a little bit like this. So EY is going to be split into two distinct branches, and thanks to Accountants Daily, they had lots of detail. I'll link in the description to the Accountants Daily article that I drew a lot of these facts from. So EY is going to split into an assurance company, which is going to be assurance, which is audits, tax, and advisory. And then they're going to have NewCo, which is the consulting. So this side is going to be the consulting side, which is going to be part of tax. So some tax is staying with assurance, regulatory related issues. There's going to be tax strategy, transaction services, and managed services going into these new businesses. So it's not just audit and everyone else. It's going to be audit, tax, advisory, and then everything else. Now you might think, where have I heard about this before? Well, the Financial Reporting Council, which is the UK's oversight body, said that, hey, we want you to split off your audit arms by 2024. Now, again, the question is, does it mean just audit, or is it like what EY has proposed, which is audit, tax, and some small business advisory, bread and butter types of accounting work, public accounting work, more traditional public accounting work, rather than this new aged consultancy stuff. So it's not new, but the financial regulator was advising this by 2024, which is only in 2 years' time. Now, what is the purpose of the split? There's a couple of different things. Number one, a lot of the audit research has shown that provision of non-audit services in some countries creates a self-interest threat. Remember, we have all those different threats to our independence as auditors: self-interest, self-review, familiarity, intimidation, advocacy. So in some of these instances, you make a lot more money off a consulting or a non-assurance job. So these non-audit services can create self-interest threats. We saw this a long time ago in Enron and WellCome, where auditors closed their eyes to the audit issues to receive the money related to the consulting issues. So it reduces those threats to independence. I'm not sure what my dog is barking at. She's getting a bit old, so I can't even tell her to be quiet because she can't hear me anymore. She's gone deaf, so I just let her do her thing. So it's reducing those threats. It also reduces that threat of familiarity and the advocacy. We can't advocate for our audit clients either, but a lot of our big four accounting firms have legal services that can potentially advocate for clients, which can create some risk if there is not appropriate safeguards in place. And that's the other thing to remember, is that our independent standards also say that there need to be appropriate safeguards. So this is one way of creating a safeguard. But the question is going to be, is it going to work? Now, there's mixed evidence on this. So if you go back to Caitlin Ruddock's research with Stephen Taylor, probably a decade ago, they found that there seemed to be no evidence that Australian firms, that Australian auditors that provided non-audit services resulted in impaired audit judgment or lower quality audits. The evidence in the US was a little bit mixed. It's a little bit different. They have a different regulatory system that we're more aligned now. So is it really going to work? I've got some positives and some negatives that I wanted to talk about. Number one, positives: segregation and less self-interest. That's going to be a good thing. Auditors kept separate. A positive is auditors are focused on specialized work. Mind you, I did enjoy doing audits as well as doing non-audit jobs. I think they both complemented each other and helped me develop my skill sets, but this allows people to become specialists. And there's a lot of discussion. I'm not sure if this is going to work, whether there's going to be increased innovation. Is this focus going to, are we going to need to think about how can we provide more value with technology, provide more efficiency? Because innovation can sometimes be thought of from an efficiency perspective in terms of driving down cost, or we can think about it from effectiveness in terms of better detection of audit misstatements, increased detection of fraud, or a combination of the two. So innovation, whether it innovates or not, we're going to have innovation is yet to be seen. Now, let me talk about some of the concerns that I have. And the first one is the possible race to the bottom. So the stuff that public accounting firms do when it comes to regulatory requirements, mandatory tax requirements, mandatory audit and assurance requirements, clients think, oh, this is just something I have to do. And so, yes, they're going to pay for a quality audit, but they're comparing a lot on price as well as quality. I know I talked to a lot of smaller businesses. They said, look, an audit's really expensive. They need one that is as cheap as they can get because that is a cost they can't avoid, but they want to try and minimize it. So there is this possibility that because there's very low margin, low profitability on audit, it's a race to the bottom and there's a risk of cutting corners. One of the things that we saw because of the downward pressure on audit fees from clients is that we've seen offshoring, which means some of the audit work is done by a team in a country that pays less in salaries than the country that is engaging in the work. So in Australia, I know that all of our big four firms have offshoring operations in countries like the Philippines, in India, where people are doing the work that our auditors are doing here, but for a lot less to try and save some of those costs. There is some discussion that because you're using lower cost labor, you could test bigger samples. But all of those people might not be accountants either. So there's pros and cons there, but I've got a concern about a race to the bottom because often for a regulatory product, you can't charge the client really the full cost. They might ask for discounts and you're always trying to figure out, well, I need to still make sure that I meet my regulatory requirements. So there's this tossing up between making a profit, retaining your customers, and then also that tension between making sure you do the audit in line with the auditing standards so that you're providing a high quality audit. And that's where we've seen the issues with consulting and non-audit services, that poor audit quality. The poor audit quality can also come from massive pressure, budget pressure, time pressure on the auditors, the people like us, well, not like us, but like you out there doing the work, under increasing budgetary deadlines and timelines. The other thing that we know is attracting and retaining talent. Students say, oh, Amanda, I'd love to be an audit. Salaries aren't great. Public accounting firms will tell you, well, you have to wait a little bit for the payoff, right? You've got to wait until you stay a bit later because what we're giving you now is experience. But, I guess if you want to try and buy an apartment to live in, get some financial security from your family, then pay for your very first job is going to be really, really important. And there are issues here in Australia. I went to an American conference this year in San Diego where audit firms were saying the same. We're having trouble getting good staff and good graduates. I'm like, well, compare our audit salaries to management accounting, finance and investment banking. If you follow me on Instagram, sometimes I share posts by the Aussie Corporate. If you're interested in investment banking, finance jobs, law jobs, and accounting jobs, and also some good memes, definitely check out the Aussie Corporate on Instagram. But you'll see that graduate law salaries are in the six figures, and audit salaries are quite a ways off that. So how do we attract and retain good talent into audit when we might lose them to consulting jobs and consulting firms where they might earn bigger buckaroonies? let me show you a headline, and it says 3 of Big 5 firms spin off consulting units. You might think, hang on, this sounds like today, but you'd be wrong because this is from 2001. If you picked up, I said Big 5, prior to the Big 4, Deloitte, KPMG, PwC, and EY, we had the Big 5. Big 5 was Arthur Andersen. When I started auditing, it was the Big 8 a long time ago. But in 2001, after Enron and WorldCom and the Sarbanes-Oxley Act, hey, Arthur Andersen sort of went down the toilet, so there was no consulting arm really to spin off, but the rest of the Big 5 firms spun off their consulting units. And if you look at this CNN Money article, and yes, this is what the internet looked like 20 years ago, because this is from 2002, PwC Consulting to go public. Again, PricewaterhouseCoopers spun off their consulting arm, and in different countries they went into different places. In Australia, when I was at PwC Consulting was spun off to IBM Consulting. IBM's pared back significantly since then, but this is not new. The fact that when they talked about this, I'm like, hang on a second, I've lived through this before. Probably most of you haven't because you're a little bit young, but in 2002, we went through this, and firms got in trouble around audit failures. They spun off consulting arms, and then they were back to being a traditional core public practice. And then over time, they see more and more ability to grow their services and grow their revenue and expand into new markets. And those new markets aren't the same as they were 20 years ago. We're looking at environmental consulting, transaction services, mergers and acquisitions, cryptocurrency assurance, digital assurance, but they're expanding their footprint. And as they expand into these other services, it creates conflicts of interest and independence, in which case they don't create the safeguards in place, or they create safeguards that maybe don't work as well as they could. And then we have corporate failure, which spurs us to spin off the consulting firm and hive back into the original, traditional Big 4 situation. So for those of us who are older, so in your 40s or older, you'll remember having gone through this before, but wow, this is the solution to solve all our problems. So what next? Because they haven't actually, the executive committee of EY have decided that this is the way to go. Now, EY is not one centrally owned massive firm. Instead, it's a network of firms. And even, the networks in the different areas are made up of smaller firms. So there are 4 main areas. So the Americas includes North America as well as South America. We've got Europe, Middle East, India and Africa, the Asia Pacific, and partners all across the world are going to have to vote in their individual firms for their firm's decision about whether to stay or go and what's going to happen. So that's really what's happening next. All right, so I might need a refresher on how to actually make my PowerPoint work within my new iPad, but let me know what you think. Do you think that the EY spin-off is going to improve audit quality and auditor independence? Do you think that it is? What are going to be the impact on audit fees, on audit salaries? What are you experiencing if you're out there in the industry? I'd also love to know what you think about the new format. Trying the weekly show thing. Hopefully this will help me sort of keep on track with a weekly show. I've got a great interview that I recorded a couple of months ago that I just haven't had time to edit. I'm going to hopefully get that out really soon around auditing standards and terminology. And if you're an Australian student studying auditing, I don't know, it's probably someone walking past that she's barking at. Make sure that you check out the new Auditing Standards Board website. They've had an upgrade to their fantastic searchable digital standards interface. I haven't checked it out yet, but I'm going to do that really soon. Hopefully in conjunction with the AUASB. Looking forward to chatting with their technical director, hopefully, about all the new features coming up soon. So I hope everybody is well. I hope everybody has been doing kick ass in your audit exams with the resources that we've got. Make sure that you check out amandalovestooaudit.com. There is a full study guide there. And let me know what you think about the This Week in Audit show. Do you want to see a show next week? And hopefully, if you like it and you want it to continue next week, you'll let me know in the comments. And I'll see you again soon.